Hey everybody, welcome back. I hope you had a great weekend and another green start to the week just like last Monday. Oil came off 2% today, which we saw energy stocks come down. Financials had a few banks report today, so the financials did pretty well. Mega cap tech was a little soft. Google was down 2.6% on news that Samsung may ditch Google as their default search and replace it with Bing. Other than that, we had the defensive sectors up and REITs were up pretty good today as well. Not much out in economic data today. We did see the Empire State Manufacturing Index come in a lot better than expected. But other than that, not a whole lot of economic data out this week. Just got the weekly jobless claims on Thursday, then a few PMIs on Friday. Fear and greed index pretty much flat at 67 and still elevated up here. And dark pools don't appear to be participating in this rally either. Same with corporate insiders. They haven't been purchasing much stock this last couple of weeks. Options market did 30 million contracts today, and similar to last week, 54% calls and still really low put percentages in the mega cap tech stocks. We see Amazon at 35%. Got Meta at 35%, Netflix 45%, Microsoft 33%, and Apple 44% as well. It may have been because of that Empire State Manufacturing Index coming in a lot better than we expected, but the bonds market is pricing in an almost 90% chance that the Fed is going to hike 25 basis points at the May meeting. And Charles Schwab reported today, and we've been watching this one closely as there's been a lot of fear and uncertainty over this company as the stock price has been getting hammered this last month ever since Silicon Valley Bank went under. However, they appear to be okay. Q1 net revenues of $5.1 billion, up 10%. Net interest revenue increased 27% year over year. Although they did see their bank deposits decline 30% year over year, they still managed to open over 1 million new brokerage accounts just in Q1. And at the end of the day, earnings per share came in at 93 cents, which was up 21% year over year and above consensus of 90 cents per share. But still a little mixed results out there as they did pause their buyback program. Their total assets decreased 21%, but they raised their quarterly dividend by 14%. All in all, the market marked up the shares almost 4%, which I'll get into on the charts later on. And in a move that could further pull money away from smaller regional and community banks, Apple is now offering a huge 4.15% interest rate on its Apple Card savings account. So it looks like they're trying to get more and more into finance, and they've partnered with Goldman Sachs on this. And they also have a generous Apple Card reward program that offers up to 3% back on purchases. So with more than 140 million iPhone users just in the US, they certainly have the distribution platform to scale this. So it'll be interesting to see how it goes. As it appears, modern day finance looks to be moving more and more away from the traditional banks. Okay, so just a quick one today in data. Let's head on over to the charts. So we just nudged up a bit here today on the S&P 500, now at 41.51, still in this big resistance zone, which I'll come back to at the end of the video. NASDAQ was mostly flat, and smalls did pretty well with the Russell up 1.2%. International indices started the week slightly positive, got the TSX up a little bit along with the FTSE. DAX came off a little bit. The Nikkei was up a little bit, Aussie came off, and China had a really good day yesterday. Interesting in volatility land, 9-day up the front jumped 8.6%, while FIX was pretty much flat, just under 17. And we're now at the lowest level since this bear market began in early last year. Bonds are still a lot more volatile than equities, as we can see in the move VIX spread here at 7.24. And just not much fear in the market there with the put call equity reading at 0.85. Breadth is holding up with 84% of stocks above their 20-day average, but new highs are struggling to put in any good numbers. Spreads are mostly flat with gross cyclicals just up a little bit. Did see growth versus value come off a bit. Tech especially came off against small caps. And commodities were down a little bit on the day as well. The yield curve is sitting flat, but we did see a good move up in the 2-year today to 420 and looks to have reclaimed this big support zone and climbing above it, just like the 10-year has been now at 360. Fed fund futures as well. The June contract at 508 climbing, September at 5% and December at 4.64. So it looks like the market may be starting to get back to this theme that we had going on in February. As the banking crisis looks to be behind us, we're now above the 50 bars, and for the most part the economy is still okay at the moment with the unemployment rate at 3.5%. So Jay is yet to break the labour market, so he's going to keep his foot on the gas on rate hikes until something breaks. And with that move up, we're seeing treasuries lose their 50-day and close down 1.2% today. Dollar's hanging in there at a major support zone around 101, and Bitcoin didn't manage to break out of this big resistance zone over the weekend and has moved back down below $30,000 a coin. Commodities had a little bit of a pullback today, along with gold and silver, and crude came off 2% but still above $80 a barrel. Natty gas jumped 7.62% today, but still below its 50 bar, still trying to put in a bottom here like we have been doing for the last couple of months. Over to stock sectors, mostly green out there. We did see the semis pretty much flat and the energy sectors come off along with gold miners. Saw a big jump up in biotech, and we've now got the financial sector above its 50 bar and the regionals hanging in there as well, trying to put in a bottom up almost 3% today. We had a bunch of other regional banks report, and so far things look to be okay. REITs had a nice pop above their 50, and one of the strongest sectors in the market is aerospace and defense stocks, now less than 2% from all-time highs. And defensive sectors, healthcare, staples, and utilities still holding pretty strong up here. BlackRock had a good day, and with their bond funds, they're well positioned. They've been well positioned to capture some of the outflows from bank deposits into short-dated funds now that there's good yields on offer out there, and they have been climbing. JP Morgan found high highs and high lows today after a great earnings report on Friday. Exxon came off a little bit, but still holding its gap up. Tesla sitting right around its 50 and consolidating. We got earnings out on Wednesday, which we'll be watching closely. Apple's flat and consolidating. Same with Microsoft, and Google as well, sitting in its big resistance zone. Nvidia still tracking sideways as I've been forecasting, and Netflix having a bit of a pullback. Overall green and meme stocks, and we're looking at Big Bear AI breaking out here again today, and C3 AI still holding in there. So this AI hype train isn't over just yet. And over to the regional banks, First Republic, PacWest, and Western Alliance still tracking sideways, just kind of holding in there. We got Bank of America earnings out tomorrow, and they look to be moving higher into that. Citigroup holding in there, and Wells having a good day as well after their earnings on Friday. And Schwab, the big one we're watching today. So overall mixed. They did come in with EPS slightly better than expected, revenues slightly worse than expected. They did lose a bunch of deposits, but they opened new accounts. They did pause their buybacks, but they did increase their dividend. The market initially didn't like it, gapped down, but then we finished higher than Friday's close, creating a bullish engulfing candlestick pattern. And if we go down to the 15-minute time frame, we can see that gap down. That was just big buy orders, and it held, didn't even come down for a 50% retest. So that to me is really bullish price action and may have marked a low here. And if we just look at our fundamental chart on our stock fair value indicator, we've got fair value at $82, so up around here, and we're currently 36% below that. So on today's big volume bullish engulfing candle, this divergence we've been watching may actually play out, and the next couple of days I would not be surprised if we back above our 50 on Charles Schwab, as the low 50s may prove to be a good long-term buy, as this company doesn't look to be going anywhere anytime soon. Okay, that's it for a look at all the major markets today. Let's go back to the main indices. So nothing too exciting to report here today, much the same as last week. If we just go out to a weekly chart to put it in better context, we're still consolidating with low volatility in this resistance zone here, and we do have now a bit more than a 200-point gap between the fair value net liquidity model and the current price. We may come up and touch 4,200 at some point this week, but we have just already put in 5 green weekly candles, which was already the longest stretch of green candles since the bear market has begun. And if we just go back down to the daily chart, we can see some divergences building here on our hidden divergence indicator. And on the NASDAQ, we've actually just gone back into bearish territory on our divergence indicator, which is indicating the trend may change, as we're still well above our 50 bar and have been consolidating for some time. And with the VIX now at the lowest level since the bear market begun, it is, in my opinion, a good time to add some hedges and reduce long exposure. So I'm still remaining 20% net short, and if we get a push up higher to 4,200, maybe to the top of our buy sell band here, I'll probably get 40% and 60% net short. And basically, the larger the gap between this yellow line and price, the more inclined I am to get more net short. And with those rates climbing back up, it looks to be putting pressure on NASDAQ stocks that seem to be trading a lot more flat than others. So that's it for today. Thanks for stopping by. Appreciate all you guys dropping comments and hitting the like button, and I hope to see you all again tomorrow afternoon. Cheers.